Well, welcome everybody to another week and another very volatile market post-election here. Today, we're talking everything from supply to demand to replication and how to start getting a little bit better at your trading systems and more importantly, in journey into picking the correct instrument and correct timings for you and your trading strategy. My name is Thomas Atkinson. As always, I'm joined by Ty and Abella. How you going this week, Ty? You going pretty well?
Good, Tom. Hey, hello everyone, and welcome to tonight's webinar, or today, wherever you are in the world. Yeah, look, we've seen some really good market action since the election. I think the market's been relatively well behaved. There's plenty of volatility there, but I think it's, from a technical standpoint, it's behaving itself quite well. And I think we're going to be able to talk some really good supply and demand areas tonight in quite a few of the majors and key indices. So yeah, looking forward to it.
Yeah, so as always, guys, today we'll be going through a little bit of live action and then discussing kind of what you could have done at certain levels, also talking about where we're at right now. And we'll go through indices into currencies, into commodities, and then we'll end up in crypto as well, because of course everyone's loving the crypto market at the moment due to its mass volatility. If you have questions throughout, please feel free to ask them in the chat. We will answer them along because this is an interactive session. As always, if you're watching it in replay, make sure to click in the links in the description down below so you can get access to viewing this every week and making sure to keep up to date. Because we do this, it's helpful for you to be able to not only learn, but also see how things can be put in place in terms of practicality. Okay, well, let's start off here with the S&P 500, which we've got up right now. And we've just seen and witnessed a all-time high close on the S&P 500. And even the futures managed to get just a little bit higher at that 60-30 area. Now, Ty, this is a very important zone, isn't it? Because it's the 6,000 level. And if we're able to hold, especially a weekly above the 6,000 level, you'd have to think that means that the market has quite a lot of room to give by the end of the year into next year.
Yeah, I think it's a strong possibility, actually. I think you're right about the 6,000 being a really, really important zone. I think with that level, I think the daily and the weekly closes are extraordinarily important. So every time the daily closes above it this week, I think it's going to be an important landmark. But just as importantly, and probably the most important, really, if the week can actually close off above 6,000, I think it does a really good base for potential moves up to, well, I mean, it's anyone's guess, really. Who knows where fair market is for the S&P 500 now? I mean, realistically, it could be the non-stoppable beast. Towards the end of the year, we know that we do often get a bit of a run into December. So, we generally have a little bit of weakness in the first week of December. Then we get that Christmas rally that everybody loves to get excited about. So, I think that it's a telling time for the S&P that if it can hold above 6,000, especially if it can hold up there in the first week of December, I think that bodes very, very well for what we're going to see. Yeah, probably leading into the new year, really.
So I'll just click over here to the SPX on the right-hand side. This is just a good code to have if you want to do some indices. Use a mixture of looking at your Pepperstone platform and the futures, and then also looking at the real market in terms of the one that's open during the normal hours, not the 24/5 hours. And what this will show you is we just got the first green candle close above 6,000, which is, I think, considerable. And when it comes to supply and demand theory, or when it comes to any of these support resistance theories and market structure theories, it's really important to note when things have closed above previous highs or lows and they've actually broken that level. So like over here, let's say, for example, we had a level of demand. We know that's demand. How do we know that's demand, Ty? Because when you draw it and it breaks to the upside and it comes back down, that's telling us that there was some form of buying that happened there, for some form of accumulation. And in essence, once it breaks to the upside, you know that's a demand zone, so you can mark it out as demand. And that means that if the market comes back into that zone in the future, you might be looking at potentially doing some buy the dipping or looking for a turnaround or something like that. Now, that is just an example here, but here's, of course, a level of supply. So what this is signifying is that we may be breaking that level of supply and moving forward and up. And as Tyron mentioned before, guys, if we continue to see some strength here around 6,000 and the market is able to hold above 6,000 for the more candles, the better, especially the weekly, that could signify, that Santa rally / Thanksgiving to end of year rally kind of concept. I'll just give you some stats. Thanksgiving is generally a good week for markets. And then, of course, the week after is traditionally bad, actually. It's only 33% of the time up if you look at the last 20, 30 years. So we'll find out whether that's true. You don't just base on stats alone, but it's interesting to note that Thanksgiving's really strong. Week after sometimes is weaker. And then, of course, it's usually strength into the end of the year if you take all of those weeks remaining and put them together. And that's what we call
No
the
one's got any
Santa
more
rally.
money to trade with Tom after Black Friday, so that's the whole deal, isn't it?
The
There's
sales are
no
too
money
good,
left
aren't
to
they?
trade with. Sales are too good.
Yeah, well, they have 6%. They probably have a couple of percent. If you're from America, you probably have a couple of percent left because I heard turkeys went 3% down, Ty. So it's all good.
Right.
Turkeys are 3% cheaper. Don't worry. All right. So anyway, that's a little bit of a handy tip there in terms of how the
I thought you were talking
S&P
about the country.
500.
Sorry.
No, not the country. No, I'm talking about turkeys. Turkeys eating
I
turkeys.
thought you were talking
Cranberries.
about the economy of Turkey. I thought, what?
I don't know anything about the economy of Turkey. I don't think it's that great. Anyway, let's just quickly scroll over here and have a look at how the market reacted over the last week. So this was a pretty good level to actually be looking towards the long. It was kind of a case, not so much of supply demand theory, but actually a case of what we call role reversal, where we had resistances and then we had supports. And I believe we were doing this on the show live together, Ty. We were talking about how we thought that this level was quite well stacked. Now, if you scroll down, you'll notice we started to see reactions off this level. And what a reaction is generally a wick. You really want wicks. Obviously, you want a certain level of structure. We do have ways of replicating that, but you need to have the patience to react to the market. And this is a reaction. So once you see a key level and you've outlined it, whether that's supply demand or role reversal or anything else, you've built a confluence level. Once we start to see wicks reacting off that, that's actually a pretty good sign that there's a bit of a buying frenzy going on. And as we know, these markets are all algorithmic based nowadays, and there's so many transactions going through. So when you see these strong reactions off the base, that's a good sign that that your level is maybe going to hold up. It's a good first sign anyway, isn't it?
Absolutely. And look, that role reversal zone on the daily, like that's technical analysis 101. We've been trading that way for the best part of 15 years now, and it very rarely lets you down, especially on a big indice or currency where there's a lot of volume. That is it's a magical place, isn't it, Tom? And really, look, the 2 hours really good there, but you can probably go down to a 1 hour. You could go to a 15-minute if you like. You would have seen a series of higher highs and higher lows off that level at some point. And knowing that you've got a previous high to aim for, I think that's the key for us. Like we don't really love trading into new areas that haven't been touched yet. Yet when we've got a predetermined blueprint, if you like, of a market that's already gone up to, say, as an example, on the S&P 6,020, and we're hovering down there, it's a no-brainer where you take profit is. I think it really gives you an opportunity to aim for that, and the market's already gone through that level, so it's not like it's in uncharted territory. As a rule, uncharted territory isn't as easy to trade because there's a lot of unknowns. A lot of people are apprehensive to probably say the least, that the market could reverse at any time. So I don't know if the volume and the momentum is as strong as it is when there is something to aim for. When the market's been to a particular level, in this instance, I think it was around 6,016, there's a very, very strong push off a base of a role reversal like that to get there and get there in a bit of a hurry. So I think it's a great trade. And if that's all you did in trading and look for role reversal zones and aimed for the next peak, you're generally going to do pretty well, aren't you? Especially on something like the S&P 500.
Yeah, the S&P also pays to be an optimist generally in S&Ps in terms of dips looking as opportunities. You'll notice here we put just a quick Fibonacci on with an extension. That's a good way to chart into uncharted territory. So when you're hitting these all-time highs, where do you look for take profits? Round numbers are going to be important. 6,000 is obviously critical here, but we have a 61.8 extension, or a 61.50. We've got the 1618 extension, which is quite popular at around 63.50. These are kind of levels that a lot of swing traders will start to look at. So fib extensions can be used quite helpfully there.
Well, I'm just curious there. Would you mind just measuring the move of the previous swing and actually just projecting that out? I just wonder whether that actually correlates with one of those zones that we've just talked about there. Because generally we see the markets move in waves, a distance of waves that are equal to the previous wave. So I reckon there's a pretty good chance there that that's going to probably be a 150-point move up to the 61.50. So I think that coincides with the 61.8 that you said as a projection.
Yes.
Because generally that wave we'd probably expect will be a similar wave, and at the moment it's not even halfway there. So I think I love it when things overlap and give us a few reasons to actually aim for a zone. And we are very big believers in waves replicating themselves in an uptrend. So there's a reasonable chance that there's potentially a 150-point move from that zone to make that wave equal.
Yeah, and they were literally equal in that case. So that's a good confluence storyline. Here's another example just of the US 2K, the 2000 small caps. You can see again roll reversal coming off these highs. Daily 20 moving average. Again, not really the supply demand, but it is in supply right now. It's struggling a little bit around here, but we actually think it looks overall pretty bullish. Just show you NASDAQ. NASDAQ also not quite coming down to the general demand structuring. It's a little bit different to pick this one up. But that's okay. It's just what happens. So obviously at the moment, how do we see these markets? Yeah, they're at a bit of res, but I think that generally speaking, you have to be more bullish than bearish based on statistical history and the general trend. And the trend right now, Ty, is up on all these pairs.
I actually think that of the three, Tom, my personal opinion is that the NAS may well be the best trade because the other two are at all-time highs or are about to break to all-time highs. And if they do, the NAS has got a little bit of catching up to do that might give you a bit more bang for your buck. Because if the S&P and the Russell do break to a new high and get a bit of a run on, no doubt the NAS would generally follow. And because it's got a bit of a couple of 100 points to actually its all-time high, you might get a little bit more bang for your buck from a percentage standpoint because the three of them will generally move in sync. So it's got the other two have got a bit of a head start.
Percentage to stop loss, I'd agree. I think for me, the Russell would be the best just because of just how lagged it is because it's so horrendously lagged. But I agree with you when it comes to stop losses, 100%. That's the way you'd have to think about it. It's not there yet.
No, it's not.
All right, let's move to the next one. We'll kind of go over here. We're about to get to one of Tyron's favorites for the week. I'll just jump on over to one of my favorites for the week. So we'll jump to that segment, which is from indices being the major US ones. Let's jump on over to one of the favorites of a lot of people this year being gold. And gold has had a pretty good demand pickup, actually. So you'll notice over here we had a structure between these zones. And obviously, whenever you're looking for demand, guys, what you're doing is you just draw from the high to the lows in that structure. It's the easiest way to do it. Create a green box generally for the low. That's the best way to do it. And just think of it as this area here, you're looking for a reaction somewhere in here. You don't have to necessarily pinpoint it. There are ways of doing that, but that's more complicated. So let's just go with the basics. We've created a zone between the high and the low. And then we say, if there is a reaction in here that goes towards the bull end, that makes sense because we saw this previously build a position and move towards the upside. So you should have already had this on your charts. Obviously, I've got this one down here as well. And I'm very open to a movement here. I'm very open to a movement potentially all the way down in here. But at this stage, we get one over this. You can see the wick. And this is what we call like a key level of demand. So if we then scroll down to the 2 hour, you'll notice we get that reaction, we get that strength coming through, then continues strength, makes a higher high by taking out this level of supply. So this is a level of supply. And that's telling you that in general, it looks like it's more bullish than bearish. So things are actually improving here in gold. And then when it does come back the next time, again, what you're going to be saying then is you're going to say, well, wait a second, we broke the supply, we hit the demand, we saw the turn to the upside. This is actually, for a swing trader, and day trader as well, it's actually a decent case to be made for further bull pressure. And of course, where would we be expecting the further bull pressure to come through? This level here, because we know that's a demand on the smaller time frame. So it's really just about creating structure and ignoring and getting away from this type of bit here. To try to buy the dip on this is much harder. You've only got very small structure in here. This is the last major structure. This is the last major structure. We saw over there, that was the last major structure. So what this is telling us is these are levels that we should really be paying attention to because price stayed there for a while. And if price stayed there for a while, Ty, probably did some transactions, yeah?
Absolutely.
Someone built a position.
I think it's really important. Look, the reason why price would hover in a particular zone is that it's obviously it's an area of interest, but it's an area that's well considered as well. So there's lots of orders there. It's a very well considered area. So the more consideration that you can get of an area, the more price and orders there are there, as we know, and that's always important. We talk about that every week. So I think it's really, really important to mark these up, even if you don't necessarily trade off them. I think it's extraordinarily important to have them and be aware of where they are. So when you are looking for potential trades, you don't find yourself trading into a potential brick wall. I think having yourself aware of the levels, Tom, is just as important as trading them sometimes, because there's nothing worse than placing a trade in the wrong direction and then knowing after the fact that, oh wow, how did I not see that? So I think understanding those price structures are very, very important, and mark them out and appreciate that they're there for a reason. The market consolidates in an area generally for a reason, whether it's just a pause or a consideration of a level. But the longer the pause, the more important obviously the area. And if it's got multiple touches over a period of time, it makes it even more significant.
So yeah, so for gold perspective, if you're doing a bit of supply and demand, this would have been an area that you would have been interested in. We actually marked this first bull zone question mark, and the reason we did that is because we did the analysis, we built the confluence. So for me, gold would be nice to see gold and silver both pick up around this point. I'll just show you guys silver. Silver a little bit weaker than gold, coming back down into our green box. And what this green box is a mixture of previous kind of demand zones. So you can see here the kind of demand zone over here and the demand zone over here. We see a reaction off that. We see it come back down. Got a trend line coming in this as well. We spoke about last week, spoke about the week before, I believe. And yeah, effectively, this is just a good area to start to see a buyer try to recommence. Have they done enough yet? You'll notice I've got a little alert above $30.90 an ounce. And if it gets above there, that's for a swing trader or a day trader. That's basically saying, okay, yes, we have reacted off it. You've had the patience, you've seen the reaction. Hopefully that means further gains are to be had. So that's a good little point here for silver, and certainly there. Now, Ty, from commodities such as gold and silver, let's move over to your favorite of the week, which is the US dollar. And a lot of people's here, obviously a lot of currency traders here at Pepperstone. So what's going on with the US dollar? What are your thoughts here?
Yeah, look, I feel that the US dollar is starting to feel a little bit of pressure around these highs. It's done an extraordinary job. There's no question about that. But when you go back, the weekly is a really good chart to show this. Yeah, it's broken a very, very important high, as you can see, and it's really struggling to maintain its levels up there. We know that there's resistance there. That's the first thing that we're going to look at. And then we're obviously on a weekly chart. But now what we need to do is go back. Look, I mean, even the volume, I know it's early in the week, so the volume candle is not going to be quite up to scratch yet. But it's important to pay attention that the volume has been dropping a little bit, even though the candles are still going up. Now, when we go to the smaller time frames, we're going to start to see a little bit more weakness again. We've almost got, look, if you go to a 4-hour chart or even a 1-hour chart, you are going to see a sequence of lower highs and lower lows. You know that we believe in them a lot, and we're certainly starting to see them. Is it a major trend reversal right now? Not quite, but it's potentially about to be. You can see that it's starting to weaken a little bit. We're starting to see a series of lower highs and lower lows on the 4-hour. If this happens on the daily, there's a reasonable chance that we're going to see a bit of a bounce off on the euro. I think 106 is the target I'd be aiming for. But the euro is the trade that I would be looking at, taking advantage of. If we can pop over to the euro for a second, we're going to see the complete inverse, of course. But once we know that the dollar index is playing the game and we are starting to see that weakness kick in, you can see that the euro, even on the 2-hour there, we'll just go to the 2-hour just very quickly. Sorry, I've got you changing charts here. We had it there for a second. Yeah, you can see that, to me, it looks like it wants to sort of bust up. It's got a bit of an area to get through yet. Like it's got a little bit of work to do to break that previous consolidation zone. But by golly, if it gets above there, I think it can go for a little bit of a run that will just see a bit of a pullback on the dollar index, and it's probably overdue for it. And I do like it. From this level, it needs to break above. 100%. It's good to actually note that. And when you look at the euro, I always encourage people to look at the dollar index as well, because sometimes they don't move perfectly in sync, and you can get a little bit of a clue as to where the euro is going to go if the dollar index goes first and the euro lags behind a little bit. But to me, we're about to see a series of higher highs and higher lows very quickly. Still got to do it. This is one of those ones where we're absolutely being patient. We're not reacting, and we're certainly we're not predicting in any way, shape, or form. It needs to do it. Okay, this is one of those areas where you certainly don't want to be doing any guesswork. It needs to actually shift momentum. It needs to get above those moving averages on the daily, and if it does that, I think there's a reasonable expectation that we can get back into that sort of 107.80 to 108 zone, which is a reasonable move on the euro right now.
This is a very important zone. This 106 on the dollar and 106 here for the high tie. Also, your favorite daily 20 moving average. That's obviously a
Absolutely.
supply. We bust that supply or resistance, whatever we want to call it. Then all of a sudden we're saying, okay, change of trend, things are looking better. Similar to what you saw on gold before when we were looking at that. I just want to kind of pinpoint over here. The reason that we like this level was because, of course, if you previously think about it, this is the supply. This is the market reacting to the supply. This is the market breaching the supply. This is the market consolidating above the supply, and then it breaks up. Someone in the chat, what does that make this level in the future? What kind of area is this in the future? Now, while we wait for that response, Ty, I just want to kind of just reiterate a couple of things. So, obviously, when you're looking at any currencies, always go to the dollar. Make sure you look at your dollar. Sometimes look at the Japan index as well if you trade a lot of yen pairs, and make sure you highlight and alert your areas. Now, I do know that TradingView, which is obviously this platform that's connected to Pepperstone, they do have their Black Friday sale on as well right now if you're interested in getting the extra alerts. And the only reason I say that is because sometimes as a currency trader or a commodities trader, you'll want to set a lot of alerts, especially if you want to save your time. Time is money, obviously. So this will be, you may want to have a look at that because I know this is usually the only one they do for the year that's half decent in terms of a good kind of discount. So definitely consider it. Now, if you're having a look here at the euro, that is correct. Jan says and Mitchell says it's a demand zone. That's right. So demand zone, you don't discount that. That was something big happened there because it changed from a downward trend that was really strong to an upward trend. Consolidation, went on to a big rally, obviously came down and hit this level. So Ty's spotted a key zone. We've seen it on the dollar index. We know there's something going on here, and it could be a fundamentally huge shift in the euro. We don't know that yet because we haven't seen the reaction, but we've seen the starts of the reaction. The wick, the little bit of better time frame. We're looking for the break. So some good stuff there. Anything else you want to point out here on any of the currencies, Ty? I noticed that the Aussie, which obviously has had all sorts of tariff issues today, it was actually looking really decent in terms of rallies only a few sessions ago, and then it took this low. So the Aussie's been struggling around this area. That's actually a supply in this area, guys, and it's been reacting off that. So again, you've got kind of like a supply through that area there, and you can see it's been reacting to those. The trend's still down, but if that ever gets taken in the future, that's going to change trend to the upside, isn't it?
Very similar to the euro. I think that if we get a break above there, and a day, and when we say a break, we're not talking about a 15-minute chart, right? Like we're talking about a serious time frame like the daily. If we get a daily break above that level, I think that there's a reasonable expectation that we can move up considerably higher by 100 or 200 pips, and I think that's a good move in this environment. I do like this level as well. It's struggling, I agree, at that level, but it needs to break it.
Yep.
And if it does that, we're very comfortable. I wouldn't mind looking at oil actually for a second. I know you're going to go to it in a sec.
Oh, yeah, we'll certainly we'll cover it. Do you want to? I just want to quickly just bring up yen because I noticed that yen was putting pressure on the downside here just before when I was doing some assessment. So it's continuously been an upward trend, but something possibly is about to change. And you can see here this little level of demand and support is very important for the yen. So it's suddenly weakening at a pretty decent pace. Do you have any thoughts on this, Ty? Do you think if it closes below here that it's actually going to go down further? I think it could go down like into this area.
I think around that sort of 148 is probably the target for this one. If we get a break below that, I think it's important. It's at a do or die level in my mind. It needs to either hold here and react off it, or if it breaks down, I think that the downfall to it could be around anywhere between 148 to probably 147.50. Really, I think that's probably the zone. It's spent quite a bit of time there. On the smaller time frames, look, there's no question it's looking a little bit weaker and a little bit tired, but you must remember it is at support. So, and another reason why we've got to be very patient with this one, because you can't get punished much harder than the yen if you're on the wrong side of it when it really wants to go. It's like a freight train. So you want to give it the time that it deserves. But what it will do, it will reward you for your patience, because when it does move, it moves several hundred pips at a time. So if it bounces off this level, you could find itself up very, very quickly. But if it goes down and breaks it on a daily, it could easily give you 300 pips on the downside as well. So it's a good one. It will reward patience, but it punishes the anxious Tom.
True that. It really does. Yen is a nasty one if you go into the wrong side. Reminds me of the Widowmaker, a natural gas in terms of danger. US oil, Ty, what's your thoughts here?
I love the zone that US oil is trading in from a scalping standpoint. That
Okay.
67.50 to around 72.50 is just a beautiful, beautiful zone. The technicals are behaving itself. Look, we know we've still got geopolitical issues that are driving the oil price around a little bit, but I'm very comfortable that 67.50 is a very strong base for oil. There's no question about that. You can take it out a very, very long way on bigger time frames, and it holds up very, very well from there. And I think that there is a dynamic shift when price actually gets below that level. There is a problem in what fair value is considered for oil. So I back that level in, and I am very comfortable lining up that 67.50 and that 72.50 and trading whichever direction the market wants to go. If you go to the smaller time frames and trade higher high, higher low sequences to the 72.50, you're going to go okay. And just on the flip side, if you're making lower high and lower lows, a 67.50 is also a very good aim. It's behaving itself inside these two big zones. It's a $5 zone, but prices spend a lot of time in between that zone right now, and I think that it's found its happy place for now. So while it's trading and behaving itself from a technical standpoint, it's not a bad way to follow the trend. You can see there, yeah, even on that 2-hour chart, we've had a pullback to that 20 moving average, big rejection candle down, and it's up and testing it again. So if we see, during the US session or later in the London session, a breakdown of that level, there is, a dollar potentially to be had in a scalp, but I probably emphasize that scalping is the way to go on oil right now. I wouldn't be setting long-term positions until something serious happens, and something serious is a breakdown of one of those zones, either the 72.50 or the 67.50. Until then, though, I think it's a scalping bonanza, and if you stick in between those two and just follow the short-term trends, you should be able to scalp your way through it successfully.
Yeah, I tend to agree. I don't have a strong opinion on oil on the longer term at the moment. I think it's just there's so many very critical and very real threats both ways to oil barrel price, whether it's from tariffs to geopolitical tensions to everything else.
Oh,
So
there's
yeah,
so many things
just
driving it at the moment. It's a really
yeah.
confused commodity at the moment. But I think though that helps you when it has actually found a base like this and hasn't reacted, ridiculously so. It's not a bad way to play it, because it is holding up at a level. Given that everything is being thrown at it, it's still holding up all right.
I want to talk about one of the most, probably arguably the most important chart over the last couple of weeks, which has actually been the US 10-year. And I just wanted to kind of mention this because it's very important for the dollar. And when you're looking at this, you can see the supply level. So this is the supply, and now the supply with the trend line. So great confluence kind of level. And what you'll notice is it actually weakened off this zone. And what that's doing is it's telling us that we've got potential here. If this continues to weaken, that the US dollar will also weaken. Remember, if it's US yields down, generally that will make it less, I guess, people less demand for the dollar because people will be chasing the yields. It is all things relative. So, of course, if other yields are also dropping across the board at an equal rate, that doesn't necessarily ring true. But yeah, there could be quite a lot of catalysts for this US dollar. And one of those catalysts is going to be something we've spoken about a few times, which is HSI. Let's hope it loads. There we go. So this is the Chinese market. The Chinese market went on a massive run. We spoke about this several times while doing this with you guys this year. And we've been predominantly bullish until we weren't, which was this huge rally that obviously busted back down. But this level in here is quite interesting. A 61.8 pullback. Not so much a level again of demand or supply because we're not seeing much structure. But you'll notice the only red candle that was there was around this area. And today it's running okay. It's actually up 2.32%, which is not too bad for this market. Hasn't gone above this high yet, but you'll notice that it has found its first proper rally. This is the first large candle that we've seen in the entire drop over this side here. So yeah, some life coming back into this. And I think that's a mixture of the weakness coming out of the US dollar, the weakness coming out of the US 10-year, and of course, just maybe an oversell in China. So another one for people to have on their charts and to check out as traders, because when this goes, it generally does move in a fairly large way. So you usually get that pretty large volatility. Thoughts on this trade here, Ty, in terms of action?
Yeah, I think it's trying very hard. I would love to see, from a selfish standpoint, I would love to see an inverse head and shoulders on that 2 hour. It needs to do a little bit of work to actually get that and make that happen. But I think if it did, I'd be quite excited about it, to be honest. I think there's a decent move on the way up. And I think all it needs is just a bit of consolidation at this zone. It may well do it. I don't like, as do you, candles that just go up in the air and just don't stop. We want to see structure. We want to see pullbacks. The 2 steps forward, 1 step back approach has served us very, very well from a trading standpoint. We don't like out of control markets. Markets that we can trade are very, very important to us. And I think that I would really like to see just a bit more of a pullback now, consolidation at around that shoulder, at around that sort of 19,500, and then a break to the upside. I would get quite excited about that.
Very good. All right. Well, we'll see how it ends up forming. Let's move over to Bitcoin. Obviously, a ton of interest in Bitcoin over the last couple of weeks. We've been talking about it being bullish well before then. Really, it seems like hyper pitch really came through in here with the likes of MSTR, if you're not familiar with it, going up list. I'll just show the audience here, actually, Ty, the MSTR, just because MSTR has been the popular thing, but this is what happens when you get involved in the hype beast. And you'll notice here it's dropped from the top to the bottom in only a couple of days, 38%. So you've just got to be really careful about getting into. Yes, it went up a lot, but it also dropped probably. It's probably getting on. Actually, what is that as a fib? Let's have a look here. So it's get 50% of the move actually got dropped off. So considerable drop here in that stock. Anyway, back over to Bitcoin. So we actually saw this already topping. Now, as Ty said, when we're in uncharted territory, it gets kind of hard to figure out exactly where you want to be taking profit and stuff. This was another one similar to 6,000 on the market. It's 100,000 for the coin, and it stopped just before 100,000 and sold off. Now, we were already thinking it was a little bit overbought, and it wasn't just because it's vertically up. It was also because the rate of change was too high. So if you've never used this, I thought I'd just kind of bring it in. Rate of change is a very decent indicator to be putting on your platform, and then having a look. And this one was just the rate of change. I think for the 5-day was too quick. And traditionally, when you get up to these levels, you usually see an overbought market. What I actually did was I went back and did a study on this, and I found that almost all of these periods had either consolidation afterwards or they were the end of the actual runs themselves. So you'll notice consolidation, massive consolidation, end of the run. That's right in the peak there. Consolidation, then it ran, and then ultimately was in sideways for quite some time. So whenever you saw this, you didn't really want to be feeling the FOMO, if that makes sense. Now, the reason I bring this up for supply demand is because what you might notice is we can draw kind of like a little box between this high here and these lows here and say, okay, well, if the market comes back down to this area, could we see at least a little bounce as a trader? And I think the answer is quite simply, this is a pretty interesting zone. You've got structure, you've got demand, you've got the first pullback that we've had pretty much through this whole rally. And we know that it's hype right now because it's in the news. So that's going to mean buyers are around for this, aren't they, Ty? At least any dip, they're going to have a go.
Absolutely, and I think it's a really, really important note that I think that 89 to 91 area is a do or die zone for it. I think it's a great pickup zone, but I wouldn't be the first person to that party either. I'd definitely be waiting for it to react on a smaller time frame. And if it does that, we've got the predetermined high already. We're not going into uncharted territory, although it is still very new. It has been there before, and I think that gives traders a lot of confidence that it can actually pick up there and get there again. So I think that's really important, which is good. But again, you'd want to be waiting for it to turn around. I love that zone though. I think it's a really, really good zone.
Yeah, I agree. I think this zone's very interesting. A lot of confluence there between the daily 20, anchored VWAPs, structure, demand, all sorts of things. So a lot of different traders could be in this area. The other one was Ethereum that I wanted to bring in here for some discussion. Now, Ethereum looks totally different to Bitcoin. Obviously, it's been higher before. But when you have a look at this, it's got some good signs in it, I think. First up, it went on a rally, there's no doubt. It pulled back, coming off a level of supply. So in this case, if we look at the left-hand side, we've got the supply over here. And then it bounced off arguably the daily 20, but it did so with a double bottom pattern, which means that it was kind of considered. And when you look at this chart, it's doji, 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 who knows? We'll see. That to me doesn't look bearish, but I want to get Ty's opinion on it as well, because I think some of you probably already know what I think about this. What do you think maybe first time looking at this chart?
Yeah, I haven't looked at this chart in a little while, and I've done that on purpose because I like to stick to only one crypto at a time while they're moving so quickly, so I don't get caught up. And I think, look, that consolidation zone that bounced off that 20 finally about 5 or 6 candles ago, I think was actually quite significant, and I'm not surprised that it did that. It's finding power at this point. I don't disagree, and I think that if it does break to a new high from this level, and it's tried twice, it has given it 2 fair dinkum goes. There's no question about that. I think that zone where you've got marked up is a very, very potential target, because if you look at it from the standpoint of what it's done previously, it has busted out of an important zone. Now, yes, it didn't go as fast as Bitcoin did, but this one's probably in a lot of ways giving you an opportunity to get in that Bitcoin didn't give you, I think, Tom. Because Bitcoin, if you didn't get in early on Bitcoin, if you didn't get that break, it was probably a tough one to jump in on because it moved so quickly, where I think this one's actually setting up a little bit better for the move. So definitely an important zone, but we want to see that high taken out. It has failed twice, so just be mindful of that.
Yeah, so Ty's talking about this failing here where it's wicked up and then sold off. To me, because it keeps holding in that tight range, to me, it looks like a coil. Now, of course, a coil could go bad, but whenever you have evidence that currently it's up, okay, the trend's up.
The prevailing trend is definitely up. There's no question about that.
So therefore, if we have a coil that's coiling, we should be able to give a little bit more evidence towards the upside. And I think Ty's coming to the same conclusion that I have, which is that this is not necessarily a bearish thing. It could also be winding up for a fairly aggressive move. And as Ty mentioned, crypto tends to be pretty aggressive. So you got to be a little bit fast on that. But let's have a look at the structure on the smaller time frames. So again, we see pretty nice structure actually here. Very solid kind of base formation. Test the resistance or the supply over here. Tests it again, busts back down, comes into the deep lows, rallies, and then now it's kind of like holding this level of demand here. Now, we don't really want it to get too far underneath this. Every time it goes underneath here, we want a strong rejection back up to hold this theory. We don't want it to be like, oh, yeah, I'm going to sell a giant big red candle. That's not ideal. So in this case, it would be, let's see it do it in the next couple of sessions. But the reason I bring this up is because when you look at the ETH versus Bitcoin chart, and this is when you go to a long short kind of thing, and it actually, in many ways is supply demand, because again, what is this? It's a ratio. So when this is really high, it means Ethereum is being priced maybe more fairly or maybe too highly to Bitcoin. When this is really low, basically it's saying that Bitcoin moved without it. Maybe it's time to play catch up. Think of it as like Ty said before, the Nasdaq's a bit behind the S&P and the Russell. Well, in this case, the Ethereum, which often comes with it, is a bit behind Bitcoin. So we haven't been down here that often. Usually it's during off-peak season, so when no one likes crypto. And you'll notice over here that we've got a strong level of previous demand. Where have we found ourselves? Well, that previous demand. And that led to the big rally up. So I think this is a significant level. Most people have been doing this all year. So I'm not going to say that there's a lot of crypto people have been like, oh, it's going. To me, there's nothing post this point that I'm interested in until we get to this level. And it's where we are right now. So you'll notice even the last couple of days, Ethereum has actually been holding better than Bitcoin. As Bitcoin sells, Ethereum is holding. And that's usually also a good sign, isn't it, Ty, that it is relatively strong.
Yeah, no, it is. And I think it's certainly one to watch. Look, it's certainly one that you want to be adding an alert to. Like I said, you don't want to be jumping in. No. All guns are blazing, but you want to set an alert. There's a potential to do there, but the daily's got to close above. No, it certainly does.
So some interesting stuff. I think we'll hand it over to some questions, Ty. So make sure to ask questions if you have any, guys, about what we've been talking about today. So obviously we've gone through some live market action. We went through building structure by just literally going to the high and the low of that area. It's a good way to do it. There are, of course, more nuanced ways, but this is just a good cheap instant thing. Draw a box and then look for a reaction in that box. And of course, build in some of the things we talk about all the time: anchored VWAP, daily 20 moving average, 20 moving average in general. Very, very good. Any other currency pairs or instruments that you've been looking at this week, Ty, that you think, oh, yeah, that looks pretty good?
The CAD USD is actually an interesting one. US dollar
Okay.
CAD. Pop that up. I do this I basically do this in every stream in the mornings. That I love the US dollar CAD, and it has broken to some really nice levels actually. Look, it's one of those ones where it's been respecting the 20 moving average, which I love. We had a massive rejection off that. It basically went all the way to nearly 142. Now look, there is a little bit of driver with oil as well here, of course, for the CAD. But I love when a major currency is respecting the all-important 20 moving average. Now, yes, that candle did pull back, but I think if we see a daily close above that 141 area, I think this could break to a serious move up. It's done a phenomenal job, really, in the sense that we look at where it's come from. Traditionally, the US dollar CAD doesn't move as fast as something like the yen does. So for it to be able to get from 134 to 142 effectively in the time that it has is a big deal for the US dollar CAD. And I'm not so sure it's done yet. So it's certainly one to watch, but it needs to basically fill that candle action back in, right? That candle that rejected 2/3 of that last daily candle needs to fill in. If the weekly candle is up at its high by Monday, I will be pretty impressed, and I think that we'll be looking for maybe a solid week in the US dollar CAD.
All right. So US dollar CAD, maybe a little bit. So something like this, are you thinking?
Yeah, absolutely.
Yeah.
And if we
Okay,
get a
cool.
weekly close
All right.
above the 142, it's going to be party time in Canada. There's no question about that. I like it.
All right, cool. Maybe some Canadian Thanksgiving then. All right, so guys, we've covered a lot of that stuff. In terms of questions, I've got a question coming in here. What do you think the best asset class is going to be? We always get asked this question, best asset class. Well, I think the thing is, as a trader, you shouldn't really care too much about the best asset class. Instead, you should be just looking for replication. So the key
Yeah,
is always replicate, treat this like a business, and always have your odds and your stats in favor of that. An investor is going to say, what is the best asset class, and then try to invest into it. And a trader shouldn't really care about price either. And what I mean by that is, if you think it's overvalued, it's really irrelevant to a trader,
yeah,
because what you're really doing is you're getting in, you've got a stop loss, you've got to take profit, eliminate that bias of overvalued. Because what I find a lot of people have been doing recently, Ty, is they've been trying to short stuff. I
yeah.
know for a fact that flows
Full
into
with danger.
shorting Bitcoin, flows into shorting Bitcoin went crazy over the last 48 hours. They often get owned. So don't short strength. Instead, follow the system of your replication, and that will help
Yeah.
you.
Traders need to focus on price action, not so much the asset. It's the quality price action that you're after. Don't worry too much about where the price is. Just worry about what the price action is actually doing and follow it. The old adage of trend is your friend, Tom, will never ever go away. So you really want to keep that in the back of your mind. We don't want to be lame and put trend is your friend underneath if it's in the press, it's in the price. But everybody should have it absolutely ingrained in their head. If you're a trader, if you're an investor, or if you have anything to do with the markets, trend is your friend shouldn't even be a consideration. It should just be absolutely automatic. Always know where the prevailing trend is. Always.
Yeah,
So
you definitely want to stand
yeah,
back and look at those big ones. Yeah.
absolutely. Now, like all Black Friday sales, FX Evolution have got one too. Of course, we do. Black Friday is one of our favorite times of the year. We want to celebrate and get in on the action too. So if you are wanting to build up your library with any of our courses. We've got all of them on sale at the moment until I think it's Tuesday of next week after Cyber Monday. And for the first time ever, we've actually introduced the FXE Complete Academy, which is actually an opportunity to buy everything that we've done and lifetime membership to the Market Masters Club that we basically talk about all the time. So if you want to brush up on your skills and you're interested in anything that we've talked about tonight, you'll find it in one of our courses. But you'll also find a lot of the things that we've talked about tonight in the Pepperstone videos that we've done over many years now. We've been working with Pepperstone for a very, very long time. And, on behalf of Pepperstone and FX Evolution, we really want to thank you for joining us every Wednesday night. We know we don't take your time that you're giving us for granted, and we do appreciate that you check in with us and see what our ideas on the market are. So we do thank each and every one of you for joining us every week. Absolutely. And if there's anything that you'd like to see in these webinars on a weekly basis, definitely reach out to your Pepperstone representatives, because they pass on all the feedback, good and bad, to us. We want to give you the best possible product that we can. So absolutely. Never feel afraid to reach out to them or us to give us your thoughts on what you'd like to see.
Two last questions coming in. Michelle says, thanks, guys. Signs up for the events last week. I'll see you in the Q&A very soon then. It's going to be good. And then Alex says, where do I find the recording? So you can get these over to the Pepperstone YouTube channel. And
Pepperstone YouTube channel.
Also, Pepperstone YouTube channel. It'll be up
in
there.
The video, I think they've got a videos tab. Is it a live videos tab or it's a...
No. It was a video. It's a videos. Yeah, I've looked it up in the library.
Yeah, so
all right, guys.
Big library.
Well, thanks so much, everybody, for joining us here this week. We hope you've been doing well in the markets. If you haven't been finding the opportunities just yet, don't worry. There's always another one around the corner. I'm at this present time, got like 6 or 7 or maybe even 20 alerts out looking for different breaks, probably actually more like 50. But realistically, that's because we actually do live in a world of abundance. With so many instruments on the Pepperstone platform, there are so many different things, and what you can do is set alerts. So make sure to do that. Don't waste your time always sitting in front of the charts. You just don't need to. Thank you, guys. We'll see you next week for another fantastic session. Bye for now.
Thanks, everyone.